the real inflation that everybody experiences is going to get worse. I was saying last year that 2022 was going to be worse than 2021. Inflation is here to stay and it's going to get worse. Well, that's when you're really going to see people piling into gold. The government statisticians live in a fantasy world, and the average American lives in reality. We deliberately changed the CPI. I mean, nobody pays owner's equivalent rent. So why does the government use a number that no American pays as the largest component of the CPI? Why not use actual rent, the rent that people pay? Because that number is triple or quadruple this number that the government has concocted. Or why not use house prices that are actually going up more than rents? Because people actually buy houses and they have to pay those prices. And they've made other changes to the CPI that did not exist prior, all the substitution where the basket is not the same, but it constantly changes. They take out the stuff that went up and they put stuff in that went down or didn't go up as much. And they have ways of hedonically adjusting things. So they claim that prices didn't go up when they did, or claim that prices went down when they went up, because they're making a subjective assessment of quality. But oftentimes I think they reduce prices when quality goes up, but they don't increase them when quality goes down. And so when you pretend that inflation is lower than it actually is, it makes it appear that the economy is growing faster than it actually is. And all politicians want to take credit for economic growth. And so by lying about inflation and underreporting it, they can pretend the economy is much stronger than it actually is. But more recently, it's the Federal Reserve that's been able to hide behind these doctored inflation figures as a pretense to continue its reckless monetary policy. You know, we've had the inflation for years. The Fed has been creating inflation. They just call it quantitative easing, but what they're really doing is creating inflation. What finally happened recently is that all that inflation showed up in a very big way in consumer prices. I mean, it was there before, it just wasn't as obvious because the increases weren't as big, and the government did its best to cover them up with a highly rigged CPI that has been understating the rate at which prices have been rising for years. And by the way, we are in double-digit price increases if we accurately measured those increases. It's only because of the inaccurate measurement that we're using, the CPI, that we're still under 10%. But if we measured prices today the way we measured them back in the 80s, because we often want to compare today's inflation to the 80s and 70s, it's actually north of 15%. It's actually worse than any year of the 1970s. Look at the enormity of the QE program subsequent to COVID. And, you know, look at the number of dollars that have been put into circulation over the past couple of years. A lot of the QE that was done, you know, following the financial crisis was mainly focused in the financial economy. So you saw a much bigger impact on asset prices like stocks and real estate. But this time around, the government sent all these checks directly to the people that they went and spent. In fact, the worst thing they did, and I pointed this out real time, is they told people not to go to work and to stay home. In fact, in many cases, people were ordered not to work and to stay home. So people couldn't produce goods, they couldn't produce services. Their spending should have gone down because they weren't producing as much, so they should have spent less. And that would have meant a recession, of course, but the politicians didn't want that. So they told the workers who were taking a vacation, we're gonna send you money. In fact, we're gonna give you more money than you used to earn when you had a job, even though you're staying at home, and we want you to go out and spend that money. Inflation, even if you buy the government's version of inflation, that is 8%, how are you gonna put out 8% inflation fire with a squirt gun of 0.25% interest rate? I mean, that's never worked. Interest rates are historically negative. I mean, Paul Volcker in 1980, to finally get rid of inflation, rates went to 20%. The highest inflation got in 1980 was 13.5%. So he had 6.5% real rates. to bend the inflation curve. How are we going to bend that curve when we have negative 7.5% interest rates? There is no incentive to change your spending and borrowing and consumption patterns with a negative 7.5% rate. It's not like people are going to be incentivized to start saving now because they want to earn that negative 7.5%. Of course not. People aren't going to stop borrowing even though they're getting paid 7.5% to borrow. A negative interest rate means you're being paid to go out and take out a loan. If we never fight inflation because we don't want to deal with those consequences, if we keep on printing money and monetizing government debt, then gold prices are going to go up much more. I mean, maybe stock prices will go up in that environment too, but in real terms, they'll go down even more priced in gold than in the alternative scenario where we do the right thing and everything crashes. In 2001, gold was under 300. So it went on a very big move from 2001 to 2011, from under 300 to almost 2,000. I mean, it got to over 1,900. And then we went on a substantial correction where gold dropped from 1,900 almost back to 1,000 by December of 2015. So that's when the market stopped falling. And that was coincidentally when the Fed hiked rates for the first time after having held them at zero for many years. And that actually marked the bottom in that correction. And so then gold gradually basically doubled in price over the years. And so it has been going up. It's just that everybody wants to compare it to its peak in 2011 and forgets where it came from 10 years earlier than that. As reality rears its ugly head and people finally realize that inflation is here to stay. Because at first people said there's no inflation at all. Then they said, okay, we've got inflation, but it's transitory. And then they said, okay, it's not transitory, but don't worry, the Fed's going to quickly rein it in. Once they realized that that's a lie too, that the Fed is not going to reduce inflation, that inflation is here to stay and it's going to get worse, well, that's when you're really going to see people piling into gold. The real inflation that everybody experiences is going to get worse. I was saying last year that 2022 was going to be worse than 2021 because I know in 2021, a lot of businesses were absorbing their cost increases and not fully passing them on or not passing them on at all because a lot of businesses were also convinced that this was transitory. And so they just waited it out. They said, why should we bother hiking all of our prices when this is just temporary? We'll just take a hit in the short run to our margins. We don't want to risk losing customers to competitors. And so we'll just eat it. But now in 2022, that they realize that they were mistaken, that inflation was not transitory, that it's permanent and going to get worse. Not only are they raising prices to reflect what's happening in 2022, but they're trying to catch up to what they missed in 2021. So now consumers are going to get hit